From the morning reading, QQQ, SPY, DIA, roller coaster to a higher close. 8 of 9 sectors moved higher on Tuesday. XLV, XLK, and XLY were the strongest sectors, while XLE was again the weakest sector. Oil falls 55 cents to new multi-year lows at 30.58. Breadth strengthened as decliners led advancers 1.07 to 1 on the New York Stock Exchange, and advancers led 1.01 to 1 on the NASDAQ. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:15 a.m. Central Time, and I'm recording this in preparation for the market day of January the 13th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And generally positive last night heading into this morning. All four broad market U.S. indices are up about 0.5% in general. S&P up just over 0.5%. Russell down just below 0.5%. NASDAQ up about 0.2%, and Dow up about 0.5%. Crude oil made a big move last night, up about 2.5%. Euro down about 0.4%. Bonds down about 0.25%, and gold down about 0.33%. And overseas action, China down about 2.5%, but everybody else going the other direction. Hong Kong up over 1%, Japan up nearly 3%, Germany up nearly 1%, United Kingdom up just over 1%. In terms of macroeconomic reports for today in the U.S., you have the weekly variety of the crude oil inventory report, and you have a 10-year bond auction. So if you're a bond trader, that might play with you during the trading day. You also have tomorrow, and looking forward, the weekly variety of the unemployment claims and FOMC member Bullard speaking. You have import prices. There's a 30-year bond auction. Those nat gas traders, there's nat gas storage report. And that looks to be about it. In terms of current market conditions, our volatility came down a little bit yesterday. Short-term VIX down to a 22.30. Skew still very elevated at a 138. You see the IV percentiles also ebbed off a little bit, with 38 on the S&P, 40 on the Russell, 37 on the NASDAQ, and Dow at 42. So elevated compared to where we were a few weeks ago, but certainly not elevated in the big scheme of things. And indeed, there's not an awful lot of fear premium being priced in, given the amount of price standard deviation moves that we've had in recent trading. Now, in the most recent trading, the last couple 3 days, there's actually been very little standard deviation moves, nothing in the last 2 trading sessions, and you have to go 3 back to get to 1. So things are starting to ebb back into a more normal pattern. Let's take a look at the charts themselves. You see on the SPX, we indeed seem to have had a confirmation of a reversal. So at the near term, we seem to have had something of a bounce come into play. The question, of course, now remains, is this just going to set up as a bear flag, let everybody kind of reload to take another leg down? It's still my theory A that we're going to probably see something around this area of 1870 on the SPX before this is over. Right now, we're in transition in a big, wide ranging market that's about 200 points wide, but ultimately until you break either to the north side above this 2130 area or break down below 1866, we really don't know which way this market's going to go in the long term. Short term, everything continues to see kind of a continuation of the bounce. And so we're kind of looking for that today. In terms of the Dow, very similar pattern. NASDAQ, also a very similar pattern. Russell, of course, has been so relatively weak. And indeed, while it seems to have gotten to a point of some indecision. It's hard to call this much of a bounce. Indeed, intraday yesterday, we had a new intraday low on this current swing, so that continues to seemingly break down. A couple big wicks down here at the bottom. You could take some hope for the bulls out of that, but yet closes that are below that day's open in the last 2 days. So we continue to struggle in the Russell. In terms of volatility, certainly a big reversal here, coming down out of that 25 handle area and currently trading live at around 21.35. In terms of bonds, bonds also pulling back some, but yesterday was a big day for bonds. And indeed, you'll notice here that we went through the prior highs. We took out this high here on an intraday basis. They'll close right at that high. It'll be interesting to see if indeed the market does roll back over and go down towards those 1866 areas on the S&P. If indeed bonds don't get up here into this 159 handle on the ZB futures contract, that may be in the short-term future if indeed broad market weakness continues. So continue to see strength in bonds, quite a bit of strength in volatility, and weakness in the broad markets. In the big scheme of things, though, something of a reversal and bounce in all those markets here in the last couple days. That should be enough for that. Let's take a look at the daily report. And still very, very ugly here. Phase 5, break of horizontal diagonal support. Other aspects of the portfolio investor posture. IBD status remains market in correction. Accumulation distribution score on the S&P is an E. The NASDAQ also an E. So very, very poor breadth playing out across those markets. GMI index remains a very woeful 0 out of 6 with a sell signal in place since 1210. That author remains very happily 100% in cash. I updated the stock charts decision point scoreboard yesterday. We had a number of changes I noticed, and indeed this is starting to get stacked, and we've been talking about the need to see a stack between the short-term, intermediate term, and the long-term, all in agreement. Well, frankly, they're all starting to agree to the downside. So if you take the consensus of all this, you have to start to say that while we're still a market in transition, we still remain within the range. This is decidedly bearish in its bias, and this recent bounce is much, much more likely to be just a bear flag pattern that would then leg down and then take out those lows, recent lows, and go down for the range lows for the big decision that will have to occur there. In terms of intermediate term market posture, very bearish with the bearish sentiment line. You see the position sizing opinions, no change from yesterday, 0% on the portfolio investor position sizing opinion, and on the volatility base, 50%. That intermediate term market posture is severely bearish across all 4 of the indices. Also note that the bullish clusters have either fired or gone away. So nothing there to be a hope for the bulls. Hedge warning status remains an elevated threshold level 3, which is a crash warning, saying that the conditions are present for a significant downward move, very much elevated risk in the market. It is not a prediction that this move will take place or how far it will go, but it is certainly a recognition that the risk in the market at the present is quite elevated, and you should be making moves with your portfolio, hedging tactics, and other aspects of your trading with the recognition of that elevated level of risk. In terms of the specific metrics, we've had some ebb off, but still quite a bit of warning here. Market and decline is still in place. The big spike fired a couple days ago and has fired for a long market signal now, so that's one sign for the bulls. You still have VIX futures well up over 18. Distribution day count is market in correction. We have a ratio warning that was 1 day ago closed below, and that has now reversed. So that's also a sign for the bulls. Skew remains quite elevated, actually up over 135 for about a 12% probability of a 2 standard deviation move in the next 30 days. Current week out expected move remains quite elevated, though it has come down some in the last couple days. In terms of new highs, new lows, also quite elevated, though not as bad as the last 2 days, which were up over 1,000 in each case. In this case, 831 new lows versus only 29 new highs. All 5 key intermarket risk aversion indicators remain as risk off. So again, more warnings there. Fear and greed index down to a 17. So getting pretty extreme here. And indeed, they call that extreme fear as the category. So that should also be a warning to you. In terms of the special opinions, option income strategies, covered call strategies, put selling, all 3 very, very defensive, and this hedge warning status, a level 3, not acceptable for new bullish positions for novice traders at all in any of those strategies. More aggressive traders may welcome the increased volatility and fear premium to be able to price into their option trading. Just understand that you are likely in these conditions to have the potential for very large delta and vega moves, and you got to be prepared for that. So at the very least, reduce position size and certainly make sure that you have plenty of capital for those adjustments. In terms of specifics on the sectors, a sea of red here with only utilities really holding up at all. In terms of the percent change, while most were up yesterday, you see the 5-day, 1 month, 3 month, all very much red in almost all cases. Let's see here. That should be enough for today. In terms of special opportunities, what will I mention today? I think I'll talk a little bit about these daily price guide subscriptions. If you are a day trader, we cover 16 different key markets. You see there's one basket here that's the futures markets, the 4 index future markets, S&P, Russell, NASDAQ, Dow, and then also the long bond, euro, gold, and crude oil. So 8 key futures markets all tied together in one bundle. Also, we have the Apple, Google, Amazon, Netflix, and then the index options, SPX, RUT, INDX, DJX. In terms of how this is set up, and I'm going to show you one here in just a second, these are basically put all that data that you would love to have in terms of the classic day trader support and resistance levels all into one place. It makes it super easy to be able to trade from. And this one's actually from yesterday on the indices. And you see how this is stacked here. So all the trader pivots, all the classic trader levels, all benchmarked against the close so that you can see how they are strength-wise relative one to another. But for example, this first column here is the ES. So all the levels, 200-day moving average, trader pivots, R3, day 3 high, fib retracements, value area, POCs, market profile areas. You could see all that where those overlap and so forth, all stacked up to where you can take your current price action and see where are your price clusters, where is the support and resistance zones that are most powerful to be able to use as both entries or targets in managing your trades. Even if you're not a day trader, this can be extremely helpful in being able to help you manage and time entries and exits of positions, whether it's even core positions or it's swing trades and the like, be able to see where you are in terms of the day's price action and make better and more fine-tuned entries. So very much a great tool here. This tool is literally only $25 a month for each package of 8 markets, $50 a month for everything if you wanted all 16 markets. So something to keep in mind there. And you see the website hyperlink for more information if you'd like to explore that more. As always, if you find what you're getting from here is useful to your trading, subscribe to our YouTube channel. That's free and that allows you to get an update when the content is posted. Same time, you can like us on YouTube. We take great acknowledgement of when we get those retweets to Twitter followers, to StockTwit followers, those likes on YouTube and so forth, as acknowledgement that we're doing something right here, and please do more of the same. Obviously, we put together a lot of time and effort here, so those acknowledgments do matter and are noticed. Disclaimers, as always, hit the pause button if you need more time to review, and you see the full hyperlink down here to take you to the full disclaimers if you'd like to see that. So that's enough for today. We'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.